Hello traders, I hope you're doing good. This time I want to show you how to use moving averages in fractal trading and multi-time frame analysis. You can have any set of moving averages, doesn't matter, but actually we have I have 240, 60, 30 and 15 just to show that higher time frames, I want to see them in the lower time frame, actually 1 minute time frame. So this 240 shows a 4-hour chart. This is 60, shows 1 hour, and this is 30 minutes, and that's 15. And the actual price, which is the 1 minute time frame. So what should we do is, I normally start a 15-minute chart. You can decide on your own time frame. Put a rule for yourself, like whenever the price breaks the 60 moving average and pulls back, I'm gonna take that leg, that correction, to the lower time frame and start finding the same pattern. I've done it so many times, I can tell you exactly where I'm gonna enter the market, but just for you to understand, I'm gonna take this to the lower time frame. So as you can see, price broke the moving average, came back in these 3 candles, price came back up, and then in the next candle it dropped. So we're looking at this leg. You see the last leg is actually here, but the shadow goes up there and then it crashes down. I want to take this leg, the last leg, to the lower time frame, and I follow the same pattern. So I mark it here. This is the last candle. I mark the next one. So let's go to the 1 minute time frame. Okay, as you can see, this high here was the shadow of that big candle, the 3rd candle shadow, and then crashed down, came back up. This is the high of the next candle here, and then after that the market trickles down. What we want to do, we find the best place to enter. We're gonna do the same thing. As you can see, the moving average, 60 moving average, crosses the 240 moving average here, so the market is in a downtrend. The general direction of the market is downtrend, so we're gonna look for a sell, as in the higher time frame it showed us. So I draw a trend line here, a small one, and I connect these highs and lows. Again, the price breaks this support line, comes back up, and then crashes down. It does it again, and then the second time it goes down all the way. So you can enter at 2 places. The first one, let me draw this line again. The first one is the first time that the price breaks this support line, this trend line. And the second time is when it starts to move lower than this, the last low, which is almost here or in this area. So in these 3 areas, or the cluster of these highs here, you can enter in any of them, and you can be sure that market at least hits this bottom here. With the high accuracy you can enter and then put your take profit here. Stop loss should be up there, and you can take a good trade. And you know why you can be sure that the market's gonna hit this target? Because in the higher time frame the same thing happened. And the higher time frame, the market's gonna move, let's say 70 pips. In here we're gonna take 10-15 pips. So in 70 pips there's like a 70-80% chance that the market moves that way. But when you go to the lower time frame, out of that 70%, we need only 10 pips. That's gonna be like more than 95% accuracy. So this is what you should do. Take a very good spot, take it to the lower time frame and enter. So when you enter here, the first one there, or at this area, Let's see how much it is. From there to the lower of this, 13 pips. If you enter at the top here to the low of that, 14 pips. If you enter at this one to the low of this one, another 14 pips. As you can see, every time you enter, you can get between 13, 14, 15 pips. That's enough. You need 10 pips. In this one, it's like 3-4 candles, you're done. The next one, maybe it takes 10-15 candles. The third one, maybe it takes about 3-4-5 candles, and then you're out. So you follow that. What you should do, you need a number of these trades, so you can figure out what the probability of these trades working out and hitting the target is for you. So you get the higher time frame. These, I don't know if you can see it or not, this blue line and this green line are the London market open. So I'm gonna trade at these areas. Same thing again. The market breaks the moving average, comes back up, and it crashes. I'm looking for this pattern, let's say, in the higher time frame. At this area, this high, I take it to the lower time frame and find the same thing. So let's see it happened again or not. So I put a mark here. This is the previous day. Go to the 1 minute chart. Go back. Okay, this is our line. As you can see, at this area the market is going up. Why? Because this is a correction in the higher time frame. So we have to wait until the price breaks the moving average, the 60 moving average. Breaks it, comes back up, we enter at this point. That's it. Our target at this low, a stop loss at the previous high, and then we're up. How much is it? Market moves 17 pips. To this low is 10 pips. You're out, done, in 3 minutes. You don't need to stay in the market, you don't need to do anything fancy. You just have a higher time frame, find the best entry, take it to the lower time frame, find the same entry. You can use indicators. This is here is gonna be probably hidden divergence. It doesn't matter what indicator you use, it's simple, no problem. So you're gonna follow this every day for the past 100 days. So you need a number of trades, like a 50 to 100 trades, to figure out how many of them worked out, how many of them hit the target, how many of them hit the stop loss, how long it took for every trade to work out if you enter at the exact same position. So you need these entries in the higher time frame and then break it down to the lower time frame. Now, what is the relationship between the higher time frame and lower time frame? I've always said in the previous videos, if you watch my videos, your lower time frame should be 10 to 20 times smaller than the higher time frame. So when I'm in 15-minute chart, my lower time frame is not 5 minutes because it's 1/3 only. Should be 1 minute. If I'm on 1 hour, my lower time frame is going to be 5 minutes because it's 1/12. So you figure out where your higher time frame is, find the best spot, and then take it 10 to 20 times to the lower time frame. If you find a good entry point at 1 hour, you go out to the 5-minute chart and look for the entry there. If you're in 30 minutes, probably 2-minute chart is good. It depends how many time frames your chart has, your platform offers you. If you're in 15 minutes, I'm normally in 15 minutes, so my entry time frame is 1 minute. And it's a fractal because it keeps repeating. It doesn't matter how many time frames you go up, it doesn't matter how many time frames you go down, same thing happens. That's why it's a fractal. But you need a statistics, a percentage of how many times it works out for you. Okay, this is for today. I hope you enjoyed this video. if you haven't subscribed to my channel, it's a good time to subscribe, and if you have any questions, please ask in the comment section below. And if you liked the video, please give it a thumbs up. That helps a lot. Thank you so much. See you in the next video. Bye.